The future of your financial freedom isn't some distant dream. It's built on informed decisions made today. With 2026 just around the corner, smart investors are already eyeing opportunities to grow their wealth. Today, we're diving deep into the world of Fidelity index funds, exploring 5 prime candidates that could significantly bolster your portfolio in the coming years. We're not talking about fleeting trends, but robust, long-term strategies designed for stability and growth. Get ready to unlock the potential of passive investing with one of the most trusted names in finance. Before we unveil our top picks, let's quickly demystify index funds and understand why Fidelity stands out as a premier choice for investors. An index fund is a type of mutual fund or exchange-traded fund, commonly known as an ETF, with a portfolio constructed meticulously to match or track the components of a specific financial market index, such as the widely recognized S&P 500. This passive investment strategy fundamentally aims to provide broad market exposure, significantly lower operating expenses compared to actively managed alternatives, and historically consistent long-term returns. Studies often show that these passive funds, over extended periods, frequently outperform actively managed counterparts, justifying their widespread popularity. Fidelity, as an industry-leading financial institution, offers an extensive and highly competitive suite of low-cost index funds, many distinguished by their truly remarkable zero expense ratios. This makes them incredibly attractive to savvy investors who prioritize efficiency and comprehensive diversification within their portfolios. Fidelity's established reputation for unwavering reliability, coupled with advanced research capabilities and remarkably investor-friendly platforms, collectively positions them as an ideal and trusted partner for your investment journey. Investing through a reputable brokerage like Fidelity grants you seamless access to a wide array of sophisticated tools, educational resources, and robust support systems, ensuring you can manage your portfolio effectively and with confidence. As we look towards 2026, a year that will undoubtedly continue to reward investors who commit steadfastly to the fundamental principles of diversified, low-cost, and long-term investing, these meticulously selected funds offer an excellent, proven pathway to achieving precisely that. Understanding their foundational strength is paramount. If you are actually getting value from this video, please kindly hit the like button, subscribe to this channel, and tell us what you think about the index funds we have already shared. Let's continue. Our first crucial selection for 2026 is the Fidelity Zero Large Cap Index Fund, FZROX. This fund provides broad exposure to the largest U.S. companies, mirroring the Fidelity U.S. Large Cap Index. Its standout feature, as the name suggests, is its 0.00% expense ratio, meaning absolutely no management fees. This is a game changer for long-term compounding. Investing in FZROX allows you to capture the growth of established market leaders, which historically form the backbone of a stable and appreciating portfolio. For 2026, large-cap companies are expected to continue their dominance, driven by innovation, global reach, and robust balance sheets. Placing your capital into FZROX means you're betting on the enduring strength of the American economy's biggest players, a strategy that has consistently delivered compelling returns over decades. The inherent diversification within large-cap stocks reduces individual company risk spread across hundreds of industry giants. This fund acts as a foundational block for almost any investor's portfolio, providing essential broad market beta exposure. Next, complementing large-cap exposure is the Fidelity Total Market Index Fund, FZILX. This fund tracks the Fidelity Global ex-US Index, offering extensive exposure to non-US developed and emerging market equities. Like FZROX, FZILX boasts a 0.00% expense ratio. International diversification is vitally important for 2026 and beyond because global markets often move independently. By investing in FZILX, you're strategically hedging against potential U.S. slowdowns and dynamically tapping into global growth, especially in emerging markets. This fund provides excellent geographical diversification, spreading your risk across different economic cycles. It captures companies outside the domestic market, from Europe to Asia, ensuring your portfolio isn't solely dependent on one national economy. FZILX effectively rounds out core equity exposure. Now, let's diversify our U.S. exposure beyond just large cap with our third compelling pick, the Fidelity Extended Market Index Fund, FSMAX. While not a zero-expense fund, FSMAX provides crucial exposure to U.S. small and mid-cap stocks, meticulously tracking the Fidelity Extended Market Index. Its expense ratio is a very reasonable 0.035%, offering excellent value. Why consider small and mid-caps for 2026? These companies often demonstrate significantly higher growth potential than large-cap counterparts, albeit with higher volatility. As the economy evolves towards 2026, innovative smaller companies can emerge as future market leaders, offering substantial capital appreciation. FSMAX allows you to effectively capture this dynamic segment, ensuring your portfolio benefits from the full, vibrant spectrum of U.S. economic activity. It provides a crucial piece for truly diversified domestic equity allocation, balancing large-cap stability with smaller enterprise growth potential. Historically, small-cap stocks have shown periods of remarkable outperformance, making them a strategic long-term growth component. Our fourth fund strategically shifts focus to a more growth-oriented approach, the Fidelity Growth Company Index Fund, FSPGX. This fund tracks an index comprising large and mid-cap growth stocks, specifically seeking companies identified by above-average earnings or revenue growth. Its expense ratio is also a very competitive 0.035%, offering excellent value. For 2026, technology and innovation are widely expected to remain significant drivers of market performance. FSPGX allows you to strategically tilt your portfolio towards these high-potential growth sectors without attempting to pick individual stock winners. It's a broad-based, efficient approach to capturing the upside of companies that are rapidly expanding and aggressively reinvesting in their future. While growth stocks can be more volatile, they offer substantial upside during periods of economic expansion and profound technological advancement. This fund is an excellent choice for investors looking to amplify their exposure to dynamic and innovative companies, perfectly complementing broader market and large-cap funds. It focuses on companies expected to grow earnings and revenues at an accelerated pace. For our fifth and final selection, we prioritize income and stability, recognizing that a well-rounded portfolio balances growth with essential capital preservation. The Fidelity Total Bond Fund, FBIDX, is an excellent strategic choice. This fund diligently tracks the Bloomberg U.S. Aggregate Bond Index, offering broad exposure to the investment-grade U.S. bond market. Its competitive 0.17% expense ratio makes it an efficient vehicle. Heading into 2026, potential interest rate shifts and economic uncertainties make prudent bond investing particularly strategic. While bonds typically offer lower capital appreciation than equities, their primary value lies in providing crucial diversification benefits. They act as an invaluable ballast during equity market downturns, significantly reducing overall portfolio volatility and concurrently generating a steady, predictable stream of income. FBIDX intelligently invests in a wide range of government bonds, high-quality corporate bonds, and mortgage-backed securities, providing comprehensive fixed income exposure. For investors seeking to stabilize their portfolio, diligently protect capital, and generate consistent income, especially nearing or in retirement, including FBIDX is absolutely paramount. It ensures your financial ecosystem isn't solely reliant on volatile stock market performance, offering a vital defensive component that preserves wealth during turbulent times. Diversifying with bonds is a time-tested strategy for long-term portfolio success, and FBIDX offers an incredibly efficient, low-cost way to achieve this critical asset allocation. It is profoundly about capital preservation and consistent income generation, effectively mitigating risk. Now that we've meticulously outlined 5 excellent Fidelity index funds for 2026, the future of your financial freedom isn't some distant dream. It's built on informed decisions made today. With 2026 just around the corner, smart investors are already eyeing opportunities to grow their wealth. Today, we're diving deep into the world of Fidelity index funds, exploring 5 prime candidates that could significantly bolster your portfolio in the coming years. We're not talking about fleeting trends, but robust, long-term strategies designed for stability and growth. Get ready to unlock the potential of passive investing with one of the most trusted names in finance. Before we unveil our top picks, let's quickly demystify index funds and understand why Fidelity stands out as a premier choice for investors. An index fund is a type of mutual fund or exchange-traded fund, commonly known as an ETF, with a portfolio constructed meticulously to match